Warning, some of the now homeowners that were just not long ago home buyers have seen their mortgage payments go up by 42%. People all over Reddit are actually talking about these increases. Some people say 42%, some other people saying $700, $400, you name it. And I get it, a bigger house comes with more rooms to fill, more appliances that will break, and more pipes that will burst. And probably your previous realtor and loan officer told you, hey, marry the house and date the rate. Well, and they tell you your payment will never go up. They lied to you because mortgage payments, they go up even on a 30-year fix. So let's dive in right now and find out why it is that your monthly mortgage payment will change. So see, mortgage payments have the potential to increase over time. Many homeowners think that their mortgage payment will always stay the same. In essence, what will stay the same is the principal and the interest, but there are other factors that can make your mortgage payment increase. So we're going to analyze the anatomy of a mortgage payment. Property taxes and homeowners insurance are the other components, and they can increase. And of course, if you are financing, you're borrowing money, there is a component called the escrow account. And the escrow account will contain several things that you need to be aware of. The Consumer Financial Protection Bureau has certain things there that are outlined in definitions of what an escrow account is. For example, it says when the escrow accounts need to open, what kind of cushion reserves you need to have, what happens with the deficiency, when are the disbursement dates, what is in the escrow account, the escrow analysis, and all of these other terminology that will be like, remember when you were taking your algebra classes, means nothing to you, it's all Chinese. But in essence, you need to be fully aware of what's contained in your escrow account. So this takes me to now the next point, which is the components of a mortgage payment, the anatomy of the mortgage payment. Mortgage payment includes 4 words and something else. P-I-T-I. Principal, interest, taxes, and insurance. Plus homeowner association fees, also known HOAs, or condo fees that also are part of your mortgage. So what is the principal? The principal of your mortgage loan is the amount you owe before any interest is added. For example, if you buy a house that is worth $250,000 and you put 20% down payment, that's $50,000. Your principal amount is $200,000, right? Fair enough. The interest is the cost of borrowing the money, the loan. Okay, so let's see the definition. This is according to Rocket Mortgage. An interest rate is a percentage showing how much you will pay your lender each month as a fee for borrowing money. Your mortgage lender calculates interest as a percentage of your principal over time. For example, let's say your principal loan is $200,000 and your lender charges you a 4% rate. You'll pay $8,000. That's the equal the 4% on the $200,000 on the first year of your mortgage. Of course, this $8,000 gets divided by the 12 months. Fair enough, right? You follow me. And then you have taxes and insurance. The taxes are the taxes that your county, regional, municipality, state have put for a rate that they have put for it, and that's something that you have to pay, as well as your hazard and insurance that all are paid through the escrow account. So what happens is every time you make a monthly payment, a little portion of that goes into the escrow account to fill up the account all the way until the next disbursement comes from your lender to pay for a lot of these things. Okay, that's good. So nothing has changed. Now, why do you have to have an insurance? You see, the things that are needed are insurance it's really needed for fire or lighting, explosions, hail, smoke, aircraft, vehicles, riots or civil commotions, any natural disasters. That is the only reason why it is needed. This is good, right? Will you follow me now? So that leads me to the next thing, which is the factors that cause increases on your mortgage payment. And this is where I need you to pay a lot of attention, and I'll give you some tips. Now, before I go and dive into this next point, let me know in the comments if you have experienced an increase on your mortgage payment after you move in, although you were told you will never see an increase. Let me know here. You don't have to give me the total amount that you've seen an increase, and let me know how do you feel about this. Wouldn't you will appreciate it? Real estate agent should have told you up front that there is a chance your payment will go up. So let's go back in. So the property taxes, there is a so-called the annual assessment. Every property, the counties have tables on how they assess what the rate will be for these taxes. And this is very interesting on how it works. So for example, I'm going to show you this. This is from smartasset.com. So in essence, you go and select an estate where you are located. You put the zip code and you just put the dollar amount, and then you will see what the county it is assessing. So in this case, I'm going to use Maryland, zip code 20852. I'm going to use an assessed value of $500,000. The county rate is 0.95%. So that means the property tax, the annual tax for this place, it is going to be $4,750, right? So Maryland, it's about 1.07%. So it gives you here a number. And of course, we don't have an indication of what's the national number. So insurance, homeowners insurance. Insurance costs can actually increase due to the cost on replacing parts of your property, natural disasters, and so on. Recently, you've probably seen a lot of buzz about homeowners insurance going up, especially in like coastal zones like Florida and so on. So there is a reason why they go up. So let's take a look at this report from CBS News that it says that right now insurance are going really very, very high. It says, now and after a series of violent storms slammed the Atlantic coast in recent years, the annual premiums now have quadrupled. Now they've seen the renewal rates in certain areas of the United States of $6,000. I mean, that's a sharp increase compared to other places. It says Florida resident Sam Weisner and his wife have been similarly shocked since buying their Orlando home in Orlando since 2017. Their homeowners insurance has surged from $1,500 a year to $6,000. I mean, that's an insane increase of insurance. So with that in mind, so the whole myth that your mortgage payment will not go up, it has completely changed the dynamics, right? It will go up at some point. Now, let's talk about homeowners association fees. And I chuckle a little bit because it's insane how homeowners associations, honestly though, I'll give you a secret. If you want to start a business, just create a homeowners association like an HOA company and just charge money for nothing, because that's basically what they do. Now, homeowners associations have been saying, well, you know, the cost of replacing things is going up. And because we all these many years since 2000 decided not to give any maintenance and charge you still a monthly fee for your place, that now it is the problem is that we need to start charging things. So let's investigate what's going on with this. So let's take a look right now at this Florida article that comes from Florida. Florida couple losing condo they have owned for 32 years to investors who changed the rules. And this is all it has to do because the HOA fees. You see, a lot of people are actually having to lose their properties because of the HOA fees, which is insane. Why do you want to lose your property? I mean, because of an HOA fee. That just doesn't make any sense. Or it does. So this other article, it says South Florida condo owners are dumping their homes after getting slapped with a six-figure special assessment. Okay? I mean, you're talking of insanity of now you have these special assessments, especially the condominiums. Boy, I'm upset about that whole thing, but that it is the reality that we're living right now, where all these things actually everybody has to increase their prices. And guess who's the one paying for those increases? You are the one paying for those increases. So got to start prepared for what's happening. And the very last thing here is the escrow shortages. So that's very important. Why will be an escrow shortage? Because of the increase of taxes and insurance. Let's assume that you're doing the escrow shortage thing. There is a problem. So if your bank account is now directed to put $5,000 in escrow, for taxes and one for insurance, and then your insurance go up, there's going to be a shortage, because if the insurance goes from 4 to 5 and from 1 to 2 on the hazard insurance, taxes and that, now from 5 it went to 7. So now if they are not able to collect that amount, they have to send you a letter with a special, like, hey, send a check for another $2,000, or they're going to say, hey, moving forward, your payment will be increased by the difference, which is in this case is $2,000 divided by 12, right? You follow me now. So be cautious, okay? Be cautious about that. And that takes me to this point. It says, avoid financial stress from rising payments. So I'll give you some of the tips that I always tell my clients as an agent. Number one is, do not max out your housing budget. Leave some room for potential payments increase. Meaning that if you go to a lender and the lender says, well, we qualify you for $500,000 and your monthly payment will be $3,600, and you know you are in an environment where things are growing in price, maybe you don't want to go that high. Maybe you want to sell yourself give some wiggle room to have a lower monthly payment just in case things go up, right? Always, 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 if you can, find yourself and secure a fixed rate. Whether it's a 30-year, 15-year, just secure a fixed rate so at least you know you can control these things. Additionally, you also might want to check the insurance, the hazard insurance cost for the property you live in that you're going to be buying, because you might want to call your insurance agent to say, hey, what happens if I buy this house and I combine my vehicle and all the other insurance you have? Does it make sense for me to combine it? And does it gives me some savings? So always try to bundle up these things for you to do that. I heard people like AAA, Costco, and some of the other companies that you can actually get a very good rate. I am not 100% sure of that, so I'm not endorsing them. I'm just saying that some of my clients have some success with that. So take a look. Always have an emergency fund all the time. It's very important that you have an emergency fund because it's super important. And I know people like Dave Ramsey says, hey, have between 3 and 6 months of emergency. Honestly, though, with the way things are going, 6 months, it's kind of short. I will probably try to have 8 to 12 months. I know that's a lot to ask, and I'm sure I'm going to get a lot of heat for saying that. But hey, listen, it is for your own interest, for your benefit. Just do what you can, but don't push yourself to that limit that feels very uncomfortable. Okay? So that takes me to my final point, which it is, hey, Robert, with all this craziness you're telling me, maybe I should rent and I shouldn't buy a house. And I said, maybe you're right, but maybe let me tell you why you're not right at the same time. Because guess what's going to happen if taxes and insurance go up? Do you think that the landlord is going to be willing to absorb that cost himself, herself? No, they're going to pass that cost to you. Yeah. So don't think that renting a house is going to shield you, it's going to protect you from these rising costs. It's not the case. It's quite the opposite. You probably have to pay even more because guess what? The landlord also wants to build some kind of reserves just in case that happens. So if they see some increase in property taxes, they maybe increase it even more than whatever equals per month to you, just in case something happens. And they also have to have reserves. I mean, I don't want to go in that direction, but they have to have some other things. So a landlord will pass that cost to you, and it's not going to be pretty. I guarantee you that 100%. Comparing the cost of renting and versus buying over the long period of time, it probably shows that home ownership can still be a more cost-effective way to do. I recently came across this article that says the average American drops $330,000 on rent before becoming a homeowner. Imagine what $330,000 will do if that will be applied towards the payment of a real estate, right? So that will make that significant improvements to a lot of the things that you do in your life. Always use the loan comparison calculators just to see what's the potential cost of what you're going to get into it. Listen, at the end of the day, this is a big decision. It's a big risk that you have to take to own a piece of real estate. So you always have to make sure you've done your due diligence when it comes to a lot of these things. So please read over and over the papers that you are receiving. If you don't know what it says, seek legal advice. Realtors are not lawyers, but definitely they can guide you. Loan officers are not lawyers, but definitely they can guide you. But you can always get some input from an uncle, mom, dad, or somebody else. Always try to find a neutral party to the transaction so that this person can bring some wisdom to what you're trying to do. And again, I'll come to the conclusion here of my video. Hope you like it and enjoy it. I am Robert Garcia here, and I am here to help you upsize to your dream house the smart and easy way. So if you're really looking to purchase or sell a house and you're looking to find a real estate agent, please take a look. I have my entire map right here where you can go. I can go and find you a real estate agent anywhere in the United States, and I will make sure this is a professional real estate agent that will be vetted by me so that you can ensure yourself you have the best service. And guess what? I'm not only going to refer you to that person, I'm personally going to follow up with you to make sure you're getting the service that you deserve. If you like this video, do me a favor, click on that button, like it. Thank you very much. I'll see you guys on the next one. Bye-bye.